November 2021 will be remembered as the best month for cryptocurrency so far. Bitcoin, one of the leading cryptocurrencies in the market, passed the $67,000 level, almost reaching the $70,000 milestone. Ethereum, on the other hand, hit nearly $5,000, and the total crypto market worth surpassed $3 trillion. Early investors made a lot of money. Those who bought the coin during its peak, on the other hand, have seen their investments plummet. Hey, welcome to Stock Market Mate. Today we'll talk about the crypto market. How's it doing now? Will it be worse than the 2008 crash? That's what we're going to find out in today's content. But before we get into it, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. The crypto market, Bitcoin. Bitcoin's price has dropped to $20,000 from its November peak, wiping out more than 70% of its value. In reality, the whole value of the cryptocurrency has dropped by 2/3, from $3 trillion to $980 billion. People lost fortunes, particularly retail investors who bought well-known coins intending to make more money. That's equivalent to the stock market losing more than $60 trillion in value, sliding from $93 trillion to $30 trillion. The entire globe would be stunned. However, because the crypto market is a minor portion of the stock market, so it is not producing such a massive catastrophe that may shake countries, such as the 1929 stock market crash, which was the worst in history, with the market falling 89% from its peak. This resulted in the Great Depression, which lasted over 10 years and required a world war to lift the countries out of. If the market fell that far before the recession began, what will happen now that we have officially entered a recession? Interest rate increases are most certainly not over. They will continue to rise until they reach 3 or 3.5%, which appears to be the level that will reduce demand enough to halt the greatest inflation in 4 decades. The effects of a recession: laying off workers. A recession is terrible, but hyperinflation is considerably worse because the only way out is to introduce a new currency. Yes, if hyperinflation occurs, all of your US money will be worthless. However, it is not only the United States that is raising interest rates. The Bank of England and other central banks are raising interest rates and predicting a recession. Many people are asking how the recession will affect the crypto market if a 0.5% hike in interest rates crashes some coins like Terra Luna. Which cryptocurrencies will weather the storm? And how long is the storm expected to last? We will address all of these concerns as well as many others. The fact that firms are laying off workers is quite likely the most telling symptom of a recession. Coinbase, one of the most famous cryptocurrency exchanges, laid off 18% of its workers, laying off over 1,180 people, and cautioned investors that a possible recession might result in a prolonged bear market for cryptocurrencies. Another major exchange, Gemini, announced that it will lay off 10% of its 1,000 staff. Other exchanges and cryptocurrency organizations have also stated that they're laying off 10 to 20% of their personnel in preparation for a long recession. Investors were concerned after what happened to Terra Luna. The Terra Luna crypto coin first fell from $120 to $0.02, representing a 99.9% correction, with 99% occurring within 48 hours of a black swan occurrence on May 11th and 12th. The coin dropped even lower, reaching $0.0001. But the significant deal was that it also crashed a Terra Classic USD, which is a stablecoin by 99%. The name should be enough to tell you everything you need to know. A stablecoin, unlike other crypto coins, is tied to the US dollar, which means that one stablecoin equals $1 US. There are several reasons for the crisis, but the main one is that the Fed raised interest rates, which spooked investors and caused the price to crash. That is a strong sign that, no matter how big crypto has become, investors do not trust crypto enough to remain to hold it when the economy is hit by a storm. Institutional investors have entered the crypto game, but it isn't enough because the industry is still full of fraud and worthless projects. Many cryptocurrencies serve little use other than to make money for their producers, so investors must be cautious. Crypto's purpose was to decentralize the banking system, but how can anything be used as money when it is so volatile? In fact, there are over 12,000 cryptocurrencies available. A currency is a medium of exchange, but aside from the name, these cryptocurrencies have nothing to do with currencies. The whole point of them is to hype them up until everyone starts purchasing, expecting that this is their chance to get rich, and then sell off when the prices skyrocket, making developers and early investors rich. Everyone else loses because the coin serves no use. It can technically be used as a currency, but it is too little, and no one believes it will not go bankrupt the next day. In 2021, cryptocurrencies were used to defraud investors out of about $14 billion. The developers would entice investors with buzzwords like blockchain and DeFi. We'll receive a lot of criticism for saying this, but it's true. Even if you don't like the truth, you can't hate us for stating it. Squid currency is only one of several examples where developers drew innovations from the Netflix show Squid Game, which quickly became popular around the world. According to reports, over 46,000 Americans were duped by cipher frauds last year. That is just for Americans. The global figure is undoubtedly greater. As a result, as long as the industry grows in accordance with a greater fool theory, it will not be stable enough for investors to trust their investments during times of uncertainty. The Great Fool Theory. The Great Fool Theory basically states that buying overpriced assets might occasionally result in a profit because someone else will pay a higher price for it later. We hear a lot of forecasts about where the future price of various crypto coins will be, but none of them are based on anything real because 99% of the time, it's pump and dump. This is critical to grasp since recessions expose everyone. There is no cheap money to borrow and pretend to have invented a groundbreaking technology that is in high demand by using buzzwords like blockchain, DeFi, decentralized, or whatever else. The crypto storm. However, this is not the first time crypto has seen a downturn. The previous storm occurred between 2018 and 2020 when the price of Bitcoin fell from about $19,600 to as low as $3,185. That is an 85% decrease, and the price remained in the $3,000 to $6,000 range for the majority of 2018 to 2020. This time, though, the situation is different. We still have institutional investors who own a significant amount of cryptocurrency. According to Chain Analysis, institutional investors, anyone with more than $10 million to play with, accounted for 44% of all crypto trading at the end of the second quarter of 2021, up from 8% the previous year. The storm will most certainly last 2 years as well because the Fed is unlikely to decrease interest rates from another 2 years. Because everything is dependent on inflation, this is only a prediction. Most cryptos will undoubtedly go bankrupt since it makes no sense for miners to continue mining the coin if it is economically untenable, especially given the current energy situation, which could worsen by winter. It's tough to tell where the bottom will be, but if it falls by 85% as it did during the previous crypto storm, it may fall as low as $10,000 in the next 12 months. Crypto firms have already suffered significant losses. Coinbase, one of the largest cryptocurrency exchanges, announced a $430 million quarterly deficit and lost over 2 million active members. That's only the beginning. Withdrawals and transfers between customer accounts have been halted at cryptocurrency lenders such as Celsius and Babel Finance. Other businesses are declaring bankruptcy because they are unable to satisfy their debt obligations, which reveals a lot about how these businesses were just operating on cheap capital that was accessible for the last 2 years. The storm has only just begun, so the true test is still yet to come. That's about it for today. If you found this video helpful, kindly click the like and subscribe button, and don't forget to hit that notification bell to get all your latest updates and videos. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!